Well, 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 what did I say yesterday? It didn't take long. Yes, every Fed day, the market is programmed to go up. People buy stocks when Powell is speaking because they've gotten into the habit, hey, every time Powell speaks, he's going to tell us something good. And even though they were not expecting very good news yesterday, nor did they receive very good news, if you take Powell at his word, that reflex to buy stocks every time Powell speaks still kicked in, and they went and bought stocks. But now that traders have had, and algos alike, have had a night, 24 hours, to think over what Powell said, to digest what he said, to shake off the the excitement of Fed Day, they decided that what, things aren't looking too good. And so we saw a massive 3% drop in the Nasdaq today. Not surprising that all of your tech stocks are going to bear the brunt early on of the taper, because it's the tech stocks that are the most overvalued. That's it. They're your growth stocks. Tech is synonymous with growth. The Nasdaq is the growth index. All these aggressive young guys say, hey, why would I want to, have the S&P in my 401k? I'll just buy the Nasdaq because it goes up by more. And that's true. On the way up, the Nasdaq has gone up a lot more than the S&P and the Dow. But it's probably going to end up falling a lot more too, because it's the most overvalued. You have the least profitable companies. You have the companies with the the worst foundations. You have the companies that are the most built on debt. Of course, all of the stock market is heavily indebted, and not a good buy, in my opinion, if you're looking at this, fundamentally. Which, if QE continues to fade, if the Fed ever actually does raise interest rates, which I chuckle even talking about that because it's not going to happen. But if that were to happen, all of a sudden, fundamentals will start to matter a little bit again. Because right now, as I've said, ever since the Trump tax cuts, all the growth has been based off of Fed job owning, off of promises of Fed liquidity. It's been based on Jerome Powell's assurances that he's going to keep the party going forever. But as soon as he starts to signal that, hey, it's going to be lights out here one of these days, the party is going to start winding down, then people start to feel the hangover. And that's what we witnessed in a small part today. This is what Apple, today's main casualty, today's major casualty, the biggest whale. Apple's not getting crushed because Apple is particularly bad, because all of a sudden iPhones are no longer good products. Apple's getting crushed because, it's just the tip of the iceberg. And I'm not saying this is the end. I'm not saying that, stocks will never reach new all-time highs again. But this is going to be, we're going to put in a short-term high. Because the market has to go down. It has to, in a way, crash. Although the definition of crash today is pretty conservative. 5% would be considered a crash. Although, you know what, I should check. After today, maybe the Nasdaq is down 5% from all-time highs. I should have checked that. So let's say 10%. Maybe 10% is what we would consider a crash by today's standards. Something like that has to happen in order for Jerome Powell to come in and say, you know what, all that tapering that I was talking about, all that tapering that we've been doing, all that tapering that I said would be wrapped up by March. Yeah, let's just get that off. That's off the table. We're going to continue QE. That's the first step. And then the next step is going to be, we're going to ramp up QE. We're going to go back to 120 billion a month in QE. In fact, that's not enough. We're going to go to 240 billion a month in QE. You know what? Maybe doubling it. Maybe that's not enough. Maybe we're going to triple it. $360 billion a month in quantitative easing. That's what Wall Street wants to hear. We're at what, 250% market cap to GDP, something absurd. I mean, even if we just went back to a bubble the size of the 2008 bubble in the stock market, do you realize that that would be like a 50% crash? I mean, think about it. This is not a sustainable situation. It never has been. It's only been sustained by Jay. And so to borrow a phrase from Zero Hedge, what is the strike price of the Powell put? That's what everybody's waiting for. And you know what? The faster and the harder that stocks sell off, the faster we'll find that point. Because what Jerome is doing, it's not good. They needed to change. What's the fastest way to make him change? Sell, sell, sell as fast as you can and push him into changing his ways. This guy is so easy to read. He's not a complex individual. My guess is, though, we're going to find the strike price of the Powell put before the taper is finished. I don't see how we make it to March. I don't see how we make it through January. That's a long time, 4 weeks. I mean, we're not even done with December yet. It's not Christmas yet. We have up until Christmas Eve. We've got trading days. Who remembers the Christmas Eve massacre of 2018? Ooh, I do. Now, of course, Christmas Eve massacre was the bottom back then because Powell flip-flopped there soon after. But, I mean, if Powell flip-flops that quick, if he flip-flops in a week, I'll have to, my hat will be off to him, because that'll be the fastest Powell flip-flop on record. It'll probably be the fastest Fed flip-flop ever, I think. I mean, Powell is the most prolific Fed flip-flopper in history. So I don't think that we're going to see a flip-flop by Christmas Eve. I think now what we're going to see is a race, not to the bottom, but a race to down 10%. And it can't just be the Nasdaq. It has to be the S&P down 10%. Because if it's just the Nasdaq, well then, Powell can write it off and go, oh, well, that's just tech stocks. But the tech stocks are going to lead the rest of the market because it's not like, the fundamentals are great for the S&P. So don't expect a flip-flop to come when the Nasdaq is down 10%. Wait for the S&P to catch up, which will be pretty soon thereafter. And that'll be Powell's first big test. If he makes it through that, because everyone will take a pause at that point. They'll go, okay, we're down 10%. This is a correction, as they call it, in the biz. And they'll wait, and they'll say, they'll look around, and they'll go, where's Jay? Where's Jay? Is he coming? Is Jay here? Paging Jerome Powell. And if they hear crickets, they're going to take the elevator down to 20%. Because that has been Powell's red line in the past. At exactly 20%, Powell has proven that he will ride in to save the day. He will do everything once it gets down to 20%. And if he doesn't, he'll have my respect, surely. But he will greatly disappoint the markets. Markets in quotes. They're not really markets. And as I've said, I don't think that Jay will do that. But I would be very happy to be wrong. I wish that I thought that Jerome Powell was serious, that he was going to let the bubble deflate, and that he was going to raise interest rates, and that we could start to put this all behind us and move on with our lives. That housing prices could start to come down. That, this insane bubble that has been going on longer than any other in Fed bubble history. This bubble in everything, in all assets. I just want it to end. I would like to get to a point where prices make sense. Isn't that what the free market, remember that? Can't we have a little bit of that for Wall Street? Can't we have a little bit of that for the housing market? Because by golly, I would like to own a house someday. But it's not going to be today. It's not going to be tomorrow. It's not going to be any time in the next year. It's going to take years Stocks, it's a little easier. They're exchange traded. They can take the elevator down 20%. Housing prices can't. And by the way, 20%, that's nothing. Stocks need to drop over 50%. That's what we need. Same thing with housing prices. But I mean, if you look at the size of the bubble, the size of market cap relative to GDP does not grow in this country. We are not a high growth country in the United States. We're a very mature economy. So our stock market should not be growing like this either. These companies are not, they're not growing. Their businesses are not growing. Their share prices have been growing. That's it. So that's where we're at. I don't know how long it'll take. I hope we can just rip the Band-Aid off, have it go fast. That's more exciting anyway. Rather than the stock market losing 1% here or there in any given week, over the course of 3 months. That's boring. Let's just rip that Band-Aid off. 3 weeks, 4 weeks, 5% down every week. I'll try not to talk so much about finance for the next few days. I think this will be the end of it, but I think this will serve. Today's lecture will serve to carry us through until we get down 10%. I will cover that, but until then, or until tomorrow, I will see you folks later.